Hello, I'm Bill Martin. I'd like to welcome you to On the Banks. On the Banks is a fraternity podcast where we meet brothers, hear their stories, and celebrate the shared values of Phi Gamma Delta. Our guest for this segment is Bill Kaiser. Bill is a 1977 graduate of MIT, longtime resident of the Boston area who now lives in Western Massachusetts, where he is retired after a career in venture capital. And venture capital is the subject of our conversation today. Those of us who are casual consumers of business news may hear or see the term venture capital from time to time, but may not really know very much about it. So the purpose of this conversation with Bill today is to give us a basic knowledge of venture capital and where it fits in the economy. So Bill, want to thank you for your time and the opportunity to speak with you today.
Well, I'm very glad to be here, Bill. And our friendship goes back, let me do the math, about 50 years, I think.
It is.
And
it is close.
I'm delighted to be part of this.
Yes, it is close to 50 years and goes back to the time when Bill was a chapter president at the MIT chapter, and I was a field secretary visiting there. So we go back a long ways, and it's good to, and in spite of the length of time we've known each other, we've never really had any kind of in-depth conversation about your career and the business you were in. So I'm looking forward to this today.
Thank you.
So to get us started, just give us a summary / definition of what venture capital is.
So venture capital is a term that is used and misused in some cases. But the primary premise of venture capital is to provide funding, capital, but also advice, expertise, and guidance to entrepreneurs who are starting a business or have a business up and running and need capital to grow. And that's sort of it in a nutshell. And again, that's been distorted a little bit over the years, but that's the basic premise. And the reason it started was because it was difficult if you had a private business to get anyone to give you funds to get your business up and running. That's where the venture capital industry got started.
Understood. Very good. So starting with your graduation from MIT, tell us about your path to the career in venture capital.
So as you said, Bill, I graduated in 1977 with an electrical engineering computer science degree. And truth be told, I didn't think I was a very good engineer. And so, and I like to work with people, and I enjoyed the aspect of dealing with people day to day. And so I had an opportunity to go to work for Hewlett Packard in Cupertino, California, and I accepted that position. And the position I was in was a sort of quasi-technical job where I was sort of in between the Hewlett Packard sales representatives and the factory, or the engineers who were building the products. I did that for a couple years, and I decided that I'd rather be back on the East Coast. So Hewlett Packard was kind enough to give me a lofty position of the national account manager for General Electric for Hewlett Packard. Now, I was 24 years old. I think before that I had sold candy bars door to door a couple times, but I did not have a lot of sales experience. But lucky for me, I had a lot of great people around me who would help me learn how to sell. And selling to General Electric was really an education in and of itself, because it was such a diverse conglomerate, and it had so many interesting businesses that I had the opportunity to help them solve their technical problems. So I did that for a few years, and then I realized that I was moving more in a business direction and away from my technology roots. And I applied to business school, and I was fortunate to get into Harvard Business School, and I went there in 1981, spent the 2 years and had a really fun time, and also learned a lot. And in 1983, when I graduated, I still wanted to work in the computer industry. So I looked around, and there were a couple of interesting startups in the Boston area, including one called Apollo Computer. So I joined Apollo in 83. And again, it was a very rapidly growing company. It went from 18 million to 300 million during the time I was there. And it was a crazy time, hiring a lot of people. And my responsibility was for all the software companies that wanted to put their software onto the Apollo platform. So I was going along minding my own business, and I got a phone call one day from these guys at a firm called Greylock, and they wanted to talk to me about a company they were thinking about investing in. And unbeknownst to me, what they were really doing was interviewing me. And I thought I was being talked to about one thing, but really they were trying to evaluate whether they would want me to be part of their firm. So they called me back the next day and they said, "Well, would you like to be in the venture capital business?" And to be honest with you, I didn't really understand what venture capital was. And for some reason, I decided that that was a risk I was willing to take. I joined Greylock in 1986, and the rest is history for me. It was a fantastic 30 years that I spent with the firm.
Did you know anyone at Greylock before they called you?
I sort of knew a couple of guys. There was a couple of them I had met when I was in business school, but I thought of myself as an operating person, to somebody who helps make, sell, distribute, and service things, not as a finance person per se. So I was one of the first people they hired, maybe the first person they hired who really came primarily from an operating background.
Mhm. So where does venture capital typically fit in the stages of financing the development of a company or a product?
So it's a great question, and different firms operate at different places in the life cycle of a company. My favorite time was to be there right at the beginning. So it might be, the joke is two guys and a dog in a garage, right? So they have an idea, they haven't built the product yet, they're really just getting started. And in venture capital parlance, that's often called the seed stage or seed financing, SEED, and where you're just giving a little bit of capital to sort of get to the next milestone. And that's very typical in the venture business, that you're funding the business so the company can get to the next milestone. That milestone might be another financing. If you had a seed investment, you might be trying to get yourself to a Series A, and the Series A might have the product starting to ship. Maybe you have a customer or two, and you're starting to generate revenue. And then you have subsequent rounds if you need them for additional capital. And the idea is that you will grow the business to a point where you're cash flow positive, and then you don't need to raise capital anymore unless you really want to. So I always like to get involved super early. I find it exciting and risky, but really fun.
So a venture capital firm could provide the seed financing or a next level or two,
Correct.
continuing that relationship.
Yes, it would be
with that
very
business.
typical. It would be very typical to participate in the subsequent rounds in support of the company. But we always like to get. I personally always like to get involved at the earliest stage I could.
Sure, understood. Are there types of companies or products that for which venture capital is particularly well suited for financing and development?
Yeah, again, it's a good question, and at least in those days, the kinds of companies that we're investing were not ones that were going to require hundreds of millions of dollars of investment, more like tens of millions of dollars over their life cycle. So that ruled out something like, I don't know, a chip company that needs to build fabrication plants that can cost billions of dollars. That's typically not where venture capital was at its strongest suit. There are counterexamples to what I just said, but in general, that's the case. So what kinds of businesses am I talking about? I invested almost exclusively in software companies, because a software company, the cost of goods is close to zero, basically. And so the capital that you're investing goes in directly into development and then later sales and marketing. But you could get yourself to a stage in a software company without a heck of a lot of capital. And then I'm sort of ignoring a whole sector which was very active for venture capitalists, and that's biotechnology and healthcare investing, which is not something I did personally. Our firm did. And again, that's one where you have an idea of a new kind of drug. You can make the investment and you can get yourself to a reasonable stage with tens of millions of dollars. Ultimately, the goal for a venture capitalist is either for a private company to go public or for it to be sold to another larger company. And that's the way we would generate the returns for our investors, was through either a public offering or a sale of a company.
Okay, so you mentioned software and biotechnology as two particularly strong fields
Yes,
historically over the last 30, 40 years in
indeed.
venture capital that have been well suited for venture capital financing.
Correct.
Yep. What are some of the major challenges or risks for a venture capital firm?
So, the biggest risk, of course, is that the company fails and you lose all your money. And that happens. And there is I didn't talk about where the capital comes from, but in our case, the capital came from a group of families, wealthy U.S. families, and a group of U.S. university endowments. So they were the ones that put up the money that we invested. And I can tell you, it's not a happy day to have to go to your investors at a meeting and say, well, you remember company A that we invested in? It's gone out of business and we've lost our bait. We've lost everything.
Hmm.
Now, that happens. And it doesn't happen that often. Usually there's some kind of return. It may not be 100 cents on the dollar, but it's, usually get some kind of return. And then, of course, the best cases, you can make an enormous amount of capital investment and then get a great return on it through a public offering or a sale. So those are the ways that the risks are that the business doesn't succeed and you go out of business, basically.
Sure. And I would assume then that sometimes as you're assessing a particular company or opportunity or product, then you're looking ahead to what if we get to the worst case scenario, then is there going to be any way that we're going to recoup anything, even if it's a yard sale, right?
Well, certainly that's the case. I mean, I always talk about venture capitalists as being either cynical optimists or optimistic cynics, because you have to believe that the company has the potential to be very significant and give you a chance to make 10 or 100 times your investment. If you don't think that upside is there, then you don't make the investment. On the flip side, you're right. You do have to think about the possibility of what happens if this doesn't go anywhere, and is there a company that would like to buy whatever at the yard sale that you described. But I'm talking about these businesses in a way that make me a little uncomfortable, because this is about entrepreneurs. This is about helping people achieve their dreams. And these are the people that are my friends today. They're the people that I'm closest to outside of my family, are the people that I was on this journey with, this entrepreneurial journey. So I always cringe a little bit when I hear somebody talking about a deal that they did. Because to me, these are companies. These are people in their lives that they have dedicated to try to build a business. And that was the honor and the excitement and the really the fun part, is helping these entrepreneurs achieve their dreams. That's what we were
Sure.
trying to do.
Understood. Well, even in the midst of doing that and getting that cyclic reward, how were you compensated? How are venture capital firms compensated?
So the way it works at Greylock anyway is we actually pay ourselves fairly modest salaries. You'd actually be surprised at how little the current income, the paycheck that you get is. But the exciting part, the opportunity for you financially, is that the company, the limited partners are those endowments and families that I described. They give us, pick a number, $100 million, just to make the math easy. And what we're trying to do is turn that $100 million into $500 million or more. So, and the way it works is, when a company is successful, let's say we have a company A, it goes public, and we invested 10 million, and that 10 million is now worth 50 million. So now you have $40 million of gain. And the way it works is the venture capital firm gets a certain percentage of that, and the rest is returned. The base is returned to the limited partners, and then they get their percentage on top of that. So the only way I can make money as a venture capitalist is if my companies are successful, and that they either go public and are sold at a multiple of what we invested. If you can do that, you could do very nicely for yourself as a venture capitalist.
I understand. Sure. During your career, I can think back to the periods of time for me as a layperson, hearing about all the things that were going on in the technology field and the technology boom. Oh, were there periods of time in your career that were especially exciting or challenging or memorable?
Sure. So the way the venture capital industry has tended to work in terms of investing in information technology is that there are a series of waves. That's the way I think of them. There's sort of these inflection points where something changes in the technology field, and that's what creates the opportunity for new company formation. And if you go back to the time that when I was involved, we had just finished coming into the era where mainframe computing was less sort of prevalent, and this idea of using mini computers and then personal computers, client server software, and then the internet, and then after the internet, crypto, and also AI. So you can think of it as a series of inflection points or waves that happened over time. And basically, as a venture capitalist, you're trying to ride those waves. You're trying to be there when they happen. And I could talk for hours about the different kinds of inflection points, but one of them that's particularly will always stick in my mind is I think the late 80s, early 90s, the internet had strictly been used by DARPA, the Defense DARPA, and also by universities for communicating with one another. And a change happened where the commercialization of the internet and the ability for anyone to use the internet became prevalent. And at that time, I was very close to a bunch of professors at MIT, and I get some ideas from that. I go, hang out in their offices. And a fellow named David Gifford, who was a computer science professor at MIT, called me up very excited. He says, "You need to come over and talk to me." And he sketched on a whiteboard this boom that was about to happen. This is before it was in the public's purview. And he talked about the idea that commercialization was going to allow for commerce over the internet, it was going to allow for communication and for email and all these different things. And it was very exciting, and it gave us the opportunity in very short order to fund a browser company called Spyglass, a commerce company called Open Market, a firewall company called Raptor Systems, and so on and so on. There were just so many opportunities that there was a lot of company formation that happened then. And of course, in hindsight, it seems obvious. At the time, it wasn't so clear that this was going to happen.
Yeah, understood. Was there, is there a particular, and so I won't call it a deal, was there a particular relationship or decision that you made in considering either developing a prospective company or working with a company that really stands out? A big story, either the one that got away or the one that really came through even stronger
Sure.
in results than you had anticipated.
Well, it's hard for me not to talk about a company called Red Hat, because Red Hat was a company that I had great affection for and that I was involved with for 20 years. I was on the board of the company for 20 years. And Red Hat was a pioneer in something called open source software, which is, again, starting to get into the vernacular in the world today. But back then, this was to be in the late 90s, no one really knew what it was. People didn't understand it because they said, well, this is free software. How do you make money if you're giving the software away? And the answer, of course, was Red Hat was giving the software away, quote unquote, in terms of, but they were also providing support and service and maintenance of that software. So that's how they made their money, was really on the service and support side. And it was a great business. It was kind of a crazy business. It was a wonderful company based in Raleigh, North Carolina. I met the CEO, a guy named Bob Young. He was one of the founders. And he was a Canadian who was just, full of beans and really fun to talk to. And we had a great time together. He told me very early on he didn't want to be the CEO of the company. And so he said, will you help me find someone? At that point, we had invested in Red Hat. And I think my partners thought I was out of my mind. Like, why are you going to invest in this company that gives the software away for free? It's in Raleigh, North Carolina. What are you doing? And luckily, they gave me my they gave me my lead basically and let me make the investment. And I recruited the only guy that I knew in the state of North Carolina was a friend of mine named Matthew Zulik, who I had met through another company. Matthew became the CEO, and the rest was history. It was an extremely successful software company. It went public, had great management team, and then ultimately we sold the company to IBM in, I want to say, about 2018 for $35 billion. So it was just an astonishing company. It was a great ride. It wasn't all smooth upwards to the right, but it was a lot of fun, and I met so many wonderful people. It was a privilege to be involved with Red Hat.
So let me make sure I heard the number correctly. What was the amount IBM paid for Red
They
Hat?
paid $35 billion.
35 billion. And how much had, if you can tell us, how much had you and Greylock invested in them
Yeah, it's
at
a
that
little
at that
hard. It's
point?
a little hard to make it apples to apples because honestly, I don't remember the numbers clearly anymore. But at the time that we invested, the company was valued at maybe, I'm going to make a guess of maybe $100 million. And so you do the math, 35 billion divided by 100 million gives you the return on the investment. If you had held a share of stock of Red Hat from 1998 until 2018, that's what you would have made on that share of stock. Now, the honest answer is once the company goes public, we tend to distribute the shares. So we take the profit that we've made in the form of Red Hat securities and we distribute it to our limited partners. And then it's up to them. Do they want to hold on to it? Do they want to sell it? But again, if you'd held on to that one share, you would have done very nicely. Thank you.
Yes, I would say so. So you've already alluded to this a little bit earlier in the conversation, but beyond the financial compensation, what are the rewards of a career of working in venture capital?
Well, people say they say, well, you must have gotten into the venture capital business because you wanted to make a lot of money, and that's just not true. What I love to do is I love to work with entrepreneurs. I'm a technophile. I love technology. I love learning about new things, and I got to do that and get paid for it. And I got to work with the most amazing entrepreneurs. And at some level, an entrepreneur has to be crazy because to take the leap of faith that you can take an idea that's in your head and turn it into something, instantiate it as a product. One story that I have to mention another entrepreneur because it's a fellow who's a very close personal friend now and with whom I was in a couple of companies, a guy named Bill Warner. And Warner and I worked together at Apollo. I left to go to Greylock. And soon after I heard Bill was going to leave, I called him up. I said, Bill, what are you going to do? He said, I'm going to start a business. I want you to come over to my house. I'm going to show it to you. And he had built a prototype of what was called the Avid Media Composer. And it was the very first video editing system, a nonlinear video editing system in the world. And, to be sitting in that guy's living room and had this friend of mine show me something that is now the standard in Hollywood for editing films and videos. The psychic benefit of that, Bill, and the fun associated with that is just indescribable.
Wow, I understand. I understand. And I can tell your enthusiasm for it also, even now. So we're going to switch over just to it sort of in closing, talk about Phi Gamma Delta a little bit. In your experience, I mentioned earlier you were chapter president at MIT when you were an undergraduate. So are there some things you learned as a brother and a leader in the Iota Mu chapter that were instrumental in your career?
The answer is absolutely. And I joined as an 18-year-old freshman, and the way it worked at MIT in those days is you would pledge very early because there wasn't enough housing, so pledging would actually take place before school started. So I didn't spend the night in a dorm. I was in the house right away, and it was a very special place to me. MIT can be a very harsh experience for students. It certainly was a harsh experience for me. And the fraternity meant everything to me, Bill. It was the place where I had my social network, but I also had my brothers who were my friends, and we all helped each other get through which can be a very, very harsh environment. I was the pledge trainer at first, and then I became the rush chairman, and then I was privileged to become the president. And when I think back I learned so much in all those roles. And when I think about three things. One is the complexity of being the leader or the CEO, if you will, of an organization that has a very significant budget. It has 50, not employees, but brothers who are doing their own thing. We had certainly philanthropic things we were trying to do. We had social service things we were trying to do. We competed in athletics. We had parties. So it was a fairly complex business. So the number one I learned is it's not easy to be in charge. It can be a very difficult thing. And I'm looking at somebody that I know had that experience for your career. The second thing I think I learned is the way you lead is by showing people. You don't tell people what to do. It just doesn't work. What you have to do is paint a vision, describe that vision, help guide people toward it, and then let them do it. And I certainly saw that as a brother and as the president of FIGAM, which is you have to tell people what you're trying to do and then let them instantiate how it actually happens. The third thing I would say is, and this is something I missed, it really is as president at IOTMU, is it's really nice to have a board of directors or a board of advisors. It's really nice to have somebody that you can call up and say, hey, this is my situation. Help me figure out how to do this. I didn't really have that. We did not have a board of chapter advisors, for example, so I didn't really have a group of people that I could talk to in that realm. You and I talked a few times along the way, I remember, but you couldn't be there day to day to sort of help me think things through. So the value of an advisory board was the third thing I think I learned at IOTMU.
Because of the absence of it, and
Correct.
you knew that would have made your job a lot easier.
Absolutely.
As a leader, yes.
Absolutely.
And I will mention, you won't brag about this, but during your time as chapter president, the chapter won 2 of the National Fraternities Awards, right, for scholarship and for most improved chapter.
Well, thanks, Bill. And I not to make light of that, but I don't think we had filled out those reports for about a decade before I became the president. And I said to a couple of the freshmen, I said, hey, come on, let's fill these out. Who knows? We might win. And we showed up, I remember, at Ecclesia, and we went to a breakfast, and I had on, jeans and a ragged T-shirt because I didn't think there was any way we were going to win. And sure enough, we did. And all the pictures show me sort of foolishly not dressed the part, let's just say.
Just rolled out of bed.
Exactly.
Figuratively speaking. Yes.
For sure.
Yeah, yeah. And I also want to mention another important connection for you to Phi Gamma Delta, which was your dad.
Thank you for mentioning that, Bill. My dad, Donald Kaiser, was class in Wittenberg. He was class, I think, 1943. I have my Fiji, is it Diamond? Is that what he got?
Diamond Owl, 75
Diamond
years.
Owl. I have that sitting somewhere around here. And my dad loved Fiji, and he had a great experience with it. And one more second about my dad. When he graduated, he actually never got to go to his commencement because he and all of his pledge class drove to Washington, D.C. and enlisted in the Army because it was World War II. So, anytime I think I have it tough, I think back about what my dad and my mom were facing when he had to go off to the war. So he was a very proud brother.
Yes, indeed. I had the pleasure of meeting him one time. Really enjoyed that.
Yes.
Well, Bill, want to thank you for spending time with us today. It's been informative and enlightening for me, and I'm sure will be for our viewers as well. So want to thank you for your time. For our viewers, there are many other interesting stories in Fiji land. Please join us again for On the Banks sometime in the future as we meet brothers and share their stories. Until next time, I'm mighty proud to be a Fijian.